Welcome again, everyone. Today is the 22nd of June. Everybody on?
This is Denny.
Got Jim here.
David?
Hey, here.
Okay, so I guess we're going to call this week boom with an exclamation point. Gold finally broke out over the 1360 level. We will talk about that. We talked before the recording, and Denny's got so many questions, this may be a 90-minute session. So, Denny, why don't you go ahead and get started and rattle the questions off.
You bet, boss. Well, what a week, and I mean really, what a week. The relentless suppression of gold seemed to be totally overwhelmed by just a tsunami of buying pressure. And I suppose we all knew that it was just a matter of time, but it was dramatic to watch in real time. Last week I mentioned that it just seemed like an explosion of events. You call it carpet bombs, if you will, that hit everywhere and just kept coming and kept everybody on high alert. But I guess the question is, what does it mean to all of us? What does it mean to our families? What does it mean to our investments and our wallets? If you missed it, gold blasted through 1362.50, which was the first resistance that Bill had told us. And then it kept right on going through 1400 for a brief bit before falling back to the mid-1390s to regroup. Well, what was resistance has now become support, and I just don't see any end to these fireworks. So that being said, let's get to the meat of it with Jim and Bill and Dave to get their take on some events of the week. All right, so it was Wednesday evening, and at about 9:25 Eastern, my phone lit up. And I know that Bill does not send a lot of text messages on his flip phones, but I do know that it was 22-666-6666, and that spelled out boom on a flip phone. Explain, Lucy, what took place this week, and how many text messages do you send in your lifetime?
I might send 5 a year.
5 a year? All right, so what took place, Bill?
The string to my tin can's not long enough.
Yeah.
So what's the question?
So the question is, what took place? You said boom. Boom is a big statement that just says, look, we just got fireworked here. But what was the trigger? Really, what was going on this week when all of this happened, Bill?
Well, remember, Wednesday was was Fed Day, if you want to call it that. They did not lower interest rates, but they took the word patient out of the wording. The betting is they're definitely going to cut a quarter point in July, maybe a half a point in July. And basically, if people have been watching gold not in just U.S. dollars, gold has been making all-time highs in a lot of different currencies. It made an all-time high in Canadian dollar, the Australian dollar. I mean, you can look currency after currency, and you can see if gold's not at an all-time high, it's banging its head up against it, except against the dollar, the U.S. dollar. And that's a function of the U.S. dollar being stronger versus foreign currencies. And basically, this was, the fifth time, I think, that we hit 1360. And as soon as it got through 1360, 250, 1365, it ran like a scalded dog. It ran $20. I mean, we literally had a $60 move in, or even over $60 move in 2.5 trading days. So basically, gold has now broken out. And what that tells me is, finally, after all this time, they're losing control.
Well, somebody got their biscuits taken away from them. That is for sure. Jim, I can only imagine the derivative mechanisms that were triggered during this last week. And when you have a primary asset like gold jumping up and staying up, my guess is that the likes of Deutsche Bank or debt instruments that are held in these derivatives just got crazy really quickly. What do you suppose took place in the derivative markets this week, Jim, while gold was jumping up?
Well, in the first place, bear in mind that no derivative can be considered bankrupt unless the derivative association deems it bankrupt, which means that as far as a public statement that X percentage of the derivatives held by Deutsche Bank are insolvent, you'll never hear that one is insolvent. So we have another piece of skewed information made up of association. Now, who makes up the association that puts out this proclamation? The dealers the major dealers in derivatives. Now, having said that, so people can understand that fake information will continue to be the primary source of statistics that we would really love to know, every derivative has an interest rate characteristic to it. Everyone. And what happened is, in terms of price and the cost of money, against the majority of the derivative positions, you've had a very distinct negative move. And, you have to realize that there's two partners in every transaction, so you could say, hey, across the board, they're losers. Across the board, there's also some winners. I think what you see here in gold is not the primary derivative event. It's the beginning of the primary derivative event, which is not interest rates, it's currencies. The largest trading entity on the planet is currencies. All major currencies. So one by one, each one of these sectors is going to come in until it impacts the fact that there's an inability not only to service credit on a sovereign basis and on a commercial basis, but the entire system so interwoven, bank to bank, that even your local bank is at risk. You will see something that would make 2000 through 2010 look very junior and provincial and kindergarten in size. So the answer to your question is the first and very important criteria for a significant amount of derivatives has gone backwards, and that the balance of the derivatives will follow in the order that I outlined. I think that covers it.
Jim, I think you should get some confidence from the fact that the likes of billionaires Paul Tudor Jones, Jeffrey Gundlach, and Druckenmiller, all of them have lined up pretty strongly on the gold side of things. So billionaires can be wrong, don't get me wrong, but when you have three guys of their stature all saying that this is the trade of the next 10 years, you should get comfort that you were right all along, Jim.
Well, how about the trillionaires, Denny?
Yeah,
okay?
Yeah, I don't know too many of those.
The quiet ones that don't talk, that have robbed us blind through socialism for the 1%, who are primarily in paper assets or treasury instruments or sovereign instruments generally. They're not saying anything. But when I say the cat is out of the bag, it can't be put back in, it means that those that are willing to talk or have something or have some public bone to grinding old is waking up the entire crew. That the unwind, even if they weren't on the inside, and most of them are, but even if they weren't on the inside, has begun. The storm has broken.
You said the cat's out of the bag, but I will tell you there's still two bulldogs left in that bag fighting back and forth, and there's a lot of rocking and rolling.
Oh, there will continue to be, because you have in this private interest, government private interest. You've got Russian interest, you have Chinese interest, which you can't be sure is the same. You have Middle East interest. So the storm that has broken has, what would you say, downdrafts and shear drafts in every single direction, including sideways. And that is only going to be a greater benefit to that asset that has no correlation to one of these violent forces in terms of determining its solvency, meaning silver and gold.
Yeah. Hey, David, we didn't bomb anybody this week. And in spite of having a multi-billion-dollar drone being shot down, allegedly by some deep state operatives disguised as some crazy Iranian splinter group, the United States didn't take the bait. No retaliation, no shock and awe, just a quiet statement from Trump that said, I think somebody made a really bad mistake. Dave, what are your thoughts about this whole week in Iran?
I'll sum it up this way, Denny, and I've tried to put this to listeners for a long time now. The United States got punched in the face. We shoot our mouth off nonstop. I'm embarrassed. I'm just embarrassed the way we conduct ourselves in the world stage. We talk to other countries like they're all piles of dog dung. That's not the way you conduct diplomacy. If another country that was hostile to the United States was flying a drone and a reconnaissance plane, whether it was 10 miles, 12 miles, or 14 miles off the coast of Virginia or San Diego, what do you think the response of the United States would be? We would flip out. We told Russia they can't even be in Venezuela because they don't belong in this hemisphere. Yet we think we could fly reconnaissance planes and drones right off, whether it's 8 miles, 10 miles, 12 miles, 14 miles off an adversary's coast, and goad them into doing something. Iran punched the United States in the mouth and said, I dare you. You want to fight? Let's have a fight. Exact words. If the enemy fires one shot in our direction, we will fire 10 back. Iran, and I sent you guys an email that I definitely will not repeat in the air. Iran is set to retaliate against our allies and our interests in the Middle East. One, I don't believe anything that Donald says. He's a real estate developer. Real estate developers shoot their mouth off non-stop. If we were going to bomb Iran, we would have set Israel on fire. We would have set Saudi Arabia on fire. We would have closed the Gulf. We would have closed the Strait. Iran would have caused oil prices to go to hundreds of dollars a barrel. The United States economy is so fragile that that would push it right over the edge. So I believe what happened is we got punched right in the mouth, got knocked on our ass, and said, holy shit, these little Persians aren't playing around. And I still have to go back to, we've tried this with every single nation. Iran, I don't think, could be bullied. They are not afraid of a war. The United States is afraid of a war.
They can't be bullied because they do have the direct backing of both Russia and China.
Well, and again, that's before we even get there. You know, think of the war Iran fought against Iraq. I mean, they lost millions of people. And Iraq had the direct backing of the United States and still couldn't win. And again, I'm not an Iran lover. It has nothing to do with it. I just independently analyze what's taking place. We pulled out of a deal with Iran, whether people liked it or didn't like it. That's not the point. Iran had agreed to a deal, and they were sticking to it. And the only one who reneged on the deal was the United States. So now you have Donald Trump out. Well, we'll talk to Iran. We'll be happy to talk to Iran as long as they don't become a nuclear power. Well, Iran has said all along they have no desire to have an atomic bomb. So, you know, again, my take is very clear, whether people agree with it or not. We got punched in the face. We got knocked on our ass. And now we have to back up and figure out, well, how are we going to play the game? Because obviously our adversary is not going to fold his cards and run away like a crybaby. So, you know, people could think what they want. I've been calling this one for over 2 years.
Hey, Bill.
Excuse me, David, can I ask a question? What do you think about the possibility that the flight plan for our fighters, or the joint fighters, meaning one other nation maybe with a Piper Cub, was a large U-turn? that we never intended to do anything in Iran. But it was a
so it would light up their sites and we could see who was tracking whom. Is that what you mean, Jim?
More so to say, hey, you're going to punch us in the nose. Wait till you see what we do to you, and we've been kind now, okay? But the next time, there will be no U-turn.
Bill,
you know, to think that you call off something like that right in the middle of it—that's a hard one, man. Okay, and to think that anybody could add that what the MSM says that all the ambassadors and the politicos and the generals were all banging at the door of the Situation Room. I don't buy that. I think what you saw happen was the flight plan.
Bill, approximately 3:25 p.m. Eastern Time yesterday afternoon, Friday, gold hit $13.99.90. There was 35 minutes to go on quadruple witching hour with a lot of contracts set to expire. Everybody had their positions that had to be in place for the next 47.5 hours or 49.5 hours before markets reopen on Monday. Now, that's a long time in terms of investing. Give me some perspective of what you think traders were thinking at about 5 minutes to 4 Eastern.
Well, obviously, they understand that whatever position they have on Friday, they're going to open with on Monday. I got to say that yesterday was completely calm, being a quadruple witching, and I think it was known ahead of time by the, lack of a better term, the plunge protection team, and everything. At the last half hour of the day, pretty much everything was on lockdown. There was almost no volatility in the last 30 minutes anywhere. It's basically where everything was at 3 o'clock. That's pretty much where everything closed at 4 o'clock.
I haven't done this since the 1970s when I had to follow copper for a lot of construction contracts. But I literally refreshed my screen every 10 seconds, and to see the battle between the bid and the ask, moving up $10, falling back $6, back and forth, I had not watched that type of action for some 30, 40 years. And you could see that there was a battle going on, but it was de minimis. It didn't seem to have the power. And I just thought people had a lot of drama going in their heads. How do I want to end this at 4 o'clock Eastern before Monday at 9:30?
Well, in gold, it was a two-way market, and it's been since Wednesday, it's been a two-way market. In other words, in the past, you get a $10 rise, and they sit on it, and it's up $10 at the end of the day, or up $6. You know, they put the lock on it. In the past, you could see a $20, $30 drop in gold, and they sit on it. And, it might recover $5 or $6 toward the end of the day. But the big moves in gold and in silver, if there was a big move early in the morning, that's pretty much where it would end up late in the day. And you didn't see that Wednesday, or you didn't see that Thursday or Friday. You saw good two-way action.
Jim, I want to give you credit for the legend that you are. I have decided to call you the Nostradamus of the gold world, and I'm not sure just how long ago you called that spark to be in June of 2019, but the fact of the matter was you called it. I believe you missed it by 4 days, but Nostradamus of modern gold world, that's pretty doggone good. So I got 2 questions for you. Question number 1. How in the world do you do this? And number 2, you've made another prediction for the year 2025. So let's have it. First of all, how do you do it? And then what's this prediction for 2025?
We spent about 14 years apprenticing to the best lone wolf trader in Wall Street, friend of Jesse Livermore, my father. Okay? And by the most ancient method of learning, knowledge is transmitted, but so are genes. Bert was, without a question, he traded like Michelangelo painted, and I don't consider myself to have the ability to tie the man's shoes. in a trading sense. You had to see this. It was just marvelous. There are tools. I've given I in the past, amongst the many things that I've taught people, have taught people the basic tools, and not called attention to the most powerful ones. The other thing is, I'm very much a part of a family for whom Bert made a fortune, and I tend to think that even though they rejected him when he married an Irish girl, they all came running back so fast you wouldn't believe it. And they've treated me very well. So when you put all that together, I don't claim any special genius other than having had the right teacher, being associated with the right family, and having spent my absolute lifetime in this. Okay? I was 19 years old. I was making markets. So to me, this is I live and breathe it. Somebody says, "Get a life." I don't want a life. This is my life. How do you do it? You have to know it. You have to feel it. You actually have to be it. You have to be tutored in it. You have to be connected with the powers that make it happen. If by any great chance you have every one of those points, then you've got a fair chance of breaking even. And then it goes beyond that. So the answer is, this is not something pulled out of a hat, and it's not Nostradamus or the great Karnak. But it's all of those 5 points I just made. The fact when price and time come together, you know a prediction is right. The same way as, let's say in a very, very kindergarten way, if somebody's starting a trade and every time they take a position within 30 seconds they're wrong, they should look for another hobby. But when time and price come together, those are the two most critical elements possible. When, in the middle of the month, when you were told and expected this to happen, the price breaks out 4 days after the general period of time you were told, then you've got to know that the entire prediction is right. I was even thinking of putting in JS Mindset the symbol of the old European family I'm talking about, the coat of arms, and saying, well, one of the factors of getting something right is this. You figure out what I'm showing you. And I still may.
All right, so what about this prediction for 2025?
It's going through to 2024 and possibly into 2025. The price of gold is going to reach a reset value of at least $50,000 on a second reset, which will actually step beyond the political motivations and the plans and the worthless attempts to maintain the dollar supremacy. The market will take over, and the market, when it takes over, will also take over the computers. The computers will be sided with the general tone of the market, each one in line forcing the other to come in line, until one day, from a Friday to a Monday or Monday to a Tuesday, the physical supply of gold becomes clearly a Ponzi game, which could happen at any time. Delivery fails on any popular exchange. Then the price of gold will be set by the major gold owners, who will become the only two market makers in the world. And the price of gold will be one price, just like it was back in when it was $34 and $35. And you go in and they say, you say, what's the market? And the market says 50,000. Buy, sell. What do you want to do? That's fixed. Fixed by the market. Not fixed by the government. Fixed by the market. Now, right now, there's a lot of things going on that would indicate that there could be some developments in the Middle East, or Putin's recent statements of the dollar clearly not being reserve currency, where there might be a difference of interest. But those two are your major players when the market takes over, and they'll be part of the market takeover. So between now and the end of 2024, possibly going into 2025. There'll be two periods when gold. For the first period, gold will climb. It will look like an organized attempt to make things right. It will climb to a very significant price above what it is now. And everybody will be very well rewarded that are in fact involved in it. But it won't work. And when the market takes over, that's when the price of gold becomes set, not by edict, but by the market itself. With 50,000 or some wild price, the trader on the other end of the phone says, bid and offered. What would you like to do? You want to buy it at 50 or sell it at 50? Be my guest.
All right, so you may not be Nostradamus, but you're certainly Ray Charles. You can play the piano with your eyes closed. I'll give you that.
But I've had all. But Denny, I've had all this good fortune. Okay. I mean, I apprenticed the best trader in Wall Street. Obviously, I got some of his mercantile sense from inheritance, genes. Clearly, I talked to people who are very powerful in the gold market. Clearly, Bert had made a fortune for one of the most popular money old-time families in the world. They don't tell me much, but I get a call at 10:58, and I told you. Okay. That was the bottom. But it's going to have to work its ass off to do what it did this week.
Hey, Jim, as long as you don't get behind the wheel of a pickup truck and be Ray Charles.
Hey, listen, if I drive a pickup truck, I will be Ray Charles, and 10 guys in front of me won't be.
All right. Now, speaking of trucks, Dave, you sent me that article about the carnage that's taking place in the trucking industry as far as their rates for carrying anything. We saw it a couple years ago in the Baltic Dry Index. Now we're seeing it in just basic freight rates that they've fallen by more than 50% of where they were last year at this time. And that's kind of scary if you're a trucker. But, Dave, what is this going to mean long-term to us?
Well, excuse me. What it means is what, Jim and Bill have been saying for the past God knows how long is in fact being proven true. There was really never a recovery for the lower income people or middle income people. The lower income people and middle income people have been living on credit under the illusion that everything is great because they come home every day. And I had a friend say to me, wow, man, the market's been on a tear lately, man. My 401k is on fire. And I'm saying under my breath, oh, baby, it's going to be on fire, all right, but it's going to be the wrong way. See, I think it's been a giant con job. And when you look at, like, the trucking numbers, you can't argue with them. Stuff's not moving. Now, you could say part of that may be the trade war slowing things down. Part of it could be, look at what's going on in your neck of the woods. I mean, nothing's moving. I mean, how many bags of fertilizer do you need when you can't plant your crops?
You don't need much.
Right. So all I'm getting at here is, the slowdown seems to be proving itself out. It's like a recent article that I was, looking at. The amount of homes that were actually sold last year in the country, and it broke it out by region. It's too long and complicated to get into. But basically, a huge portion of our housing market has been held up by flipping, and flipping keeps working as long as interest rates are where they are at. And when that game runs out, you're going to have an oversupply on the market. You're going to have a downturn in the economy, and who's going to buy all these houses? Who's going to buy all the new washers and dryers, which are the things that get shipped? Furniture. That's all, that's what's all in the trucking industry. And I think what you're seeing in those numbers is just proof of what Jim, Bill, myself, and you have been saying. The recovery has been basically a paper recovery in the stock market for the very, very top people invested in it. The average stiff, even though his 401k may move back and forth, it's not like, oh, geez, I picked up an extra $2 million, $3 million this year, so I'm going to buy, I'll buy a $300,000-$400,000 boat, or I'll build an addition on my 7,000 square foot house. That creates some trickle down. But the bottom line is the trickle down isn't enough. It's too late. And unfortunately, I believe that's why you saw gold really make the move, because the Fed's in a corner. There's nothing left to do. That's my take on the trucking game.
Thanks, brother. Hey, Bill, when I go to the gas pump each week, I'm pretty numb. I guess I'm not paying attention as to the increases that I can see. Now, increases from week to week of 5% more in gas are, at least in the mid-America, is somewhat expected. And I guess more than that, the fluctuations go both ways. One week gasoline's up 5 to 10%. The next week it falls back. What is it about gold going up 5% in 3 days that is just so critical? What should we, as everyday, Joes and Janes, be mindful of when we see a $60 jump in the price of gold, which is about 5%, in a little less than 3 days? What's the bellwether here for us?
Well, the thing is, gold is money. Gold is a currency. To see a currency move 5% in 3 days is insanity. I mean, how do you do business? If you're a businessman, and let's say that you're doing business with somebody in Europe, or somebody in Europe is doing business with you, and you get that type of fluctuation, how do you make a business plan? I mean, how can you actually hedge something that moves currency versus currency by 5% in a day or 2 days? That's the importance of gold moving, and it's been the importance all along. Why has gold been held down? It's been held down to keep the Treasury Ponzi scheme and the dollar Ponzi scheme alive. If you keep gold down, then you can continue to fund. You can continue to fund the deficits. You can fund the Treasury purchases and support the dollar. So gold breaking out, as I mentioned earlier, it's at all-time highs now in quite a few currencies around the world. And what that's illustrating is that the paper currencies are in a race to the bottom. And that race to the bottom is against each other, but more importantly, it's versus gold.
All right, Jim, so what happens now? I'm sorry, Ray Charles, what happens now? Gold appears to have shaken off the 1360 curves. So you're the former trader, and notice I didn't say old trader, I said the former trader. So what are the guys, I guess they're not in the pits or in the chat rooms anymore. I mean, what are the conversations that are going on in the gold world right now? In your day, it was the one that took you up to 800 or 880. Are those same conversations taking place amongst the gold community to the next run up to 1900, the old high? Or what do you think the talk is in the trading game when it comes to the metals right now?
The trading game is past history. There is not either in equities or in commodities. The risk takers, the kids like myself and Vincent were, who were willing to take a position of enormous size against a rational conclusion. We've become automated. That automation is about to take a huge step in 5G. Artificial intelligence is real and alive, and it's about to take a huge step in that awful thing, 5G. You've got various influences in the marketplace. The biggest being the long-term influence of the physical buyers who've been operative for the last 10 years, knowing this was going to happen. You have the people who are hobbyists and consider themselves traders that are now talking about 1918 as the next area of major resistance because of that beautiful, absolutely stupendous monthly chart on gold that has one of the most perfect rounding bottoms and also a teacup of the millennium, okay? And so you have to expect that also will have an influence on the move. I'm not sure that you have a protection, plunge protection team, because were they all friends of Clinton, and now are they all friends of the Trump administration? Are they run by one central power? Are they run by that other state? Whoever their boss is to whom they answer. And politics today turns on the head of a needle called the economy. So it's not too hard to project what we're going to see going into 2020. David was absolutely correct. Every central bank's tool chest is empty. And it used to be that the Fed and the Treasury could count on Russia and China buying U.S. Treasuries of other countries or entities, funds or individuals of great wealth buying U.S. Treasuries. I'm not particularly sure that exists. Putin has been speaking about the dollar becoming losing its character as a reserve currency, while our intellectuals answer that's not possible because so many dollars are held by central banks. It is a reserve currency, but you've got a thing called an accelerator factor, law of economics. They are not repealed. And what the accelerator factor in the law of economics or the Austrian school says is something is advancing at an advancing rate or it is declining. Something is declining at a declining rate, therefore advancing. Changes in marketplace are products of momentum, is what it's saying. And right now, less and less areas of potential demand are interested in inquiring or even contracting in the U.S. dollar. So the implication, the cat out of the bag, the implication, middle of June, the implication of is the dollar a reserve currency, and all of the points we've discussed today, both political and economic, tells you the storm has broken out. A major change is about to take place. International and global power is economic, and the strongest economic powers will run the world. And that the ability for the present administration to maintain their position can only now be generated by fiscal stimulation rather than monetary stimulation. We would be the sole buyers of the dollar on balance, and therefore any attempt to use interest rates, mechanisms, central banks, influence in the money markets will result only in hyperinflations of one sort or another wherever it's debt monetizations run out of money. So
Jim,
what you're going to do is you have to build a 16-lane highway between New York and homeless Los Angeles.
Jim, listen, I'm going to start this off with Dave, but since you're the one with the most experience, feel free to jump in on this. But I'm going to start with Dave. A few months ago, one of my older good friends very quietly said something to the effect that all roads to the real decision-making in this world will probably lead you to Rome. Now, that statement was made very quietly. It was made in a one-on-one conversation, but it was made very emphatically. I've also heard the same thing said about Jerusalem. Now, Dave, you read 1,000 times more than the average citizen of this world, and I'd like not just your perspective, but your opinion. Between these two religious and political centers, Rome and Jerusalem, where are all the world decisions being made, Dave? David? All right, Jim, I'll throw that to you.
No, I'm here.
You're there,
sorry,
Dave.
I was on mute because I was listening to your question. Let's start with, I wouldn't argue for 1 second with the person's evaluation. Where the absolute top of the pyramid is, because we all agree this is a pyramid scheme. I mean, it's, they put it on the dollar bills. I mean, wake up, people. Somebody's running this show, as Jim has said 1,000 times. This leads to the top. And whether it's Rome, whether it's England, whether it's Israel, whether it's us, all you have to do is understand that it's there. And then not get hung up on, okay, which of the three, which of the four might it be? Because it really doesn't matter in the end. You just have to understand that this game is being run on the whole world's finance. This is like going to go down as the biggest Ponzi scheme in the whole history of finance. And when you get the derivatives blowing up is when you're really going to see fireworks that have never been seen before, because as Jim said a million times, the amount of derivatives isn't a problem until it's a problem. And then all of a sudden, the value is a real problem. And with everything cross-tied, and that is Iran's trump card. If they blew up the price of oil, as we talked about several weeks ago, think of the derivatives that are tied to oil. If oil went to $200, $300, $400 a barrel, what do you think would happen? The whole world would just, it'd be like one giant seizure.
And Dave, how good would our economy be if we had $10 gasoline?
Oh, you'd crush it. You'd forget about it. It'd be all over. I had a talk with a friend the other day. We were at the marina, and go to a marina and fill up a 1,000-tank diesel at $3.80 a gallon. I don't care. These numbers start mattering. 200-gallon tank and a 25, 27-foot runabout. You're talking, $3.80 a gallon, $4 a gallon for marine fuel, 200 gallons. That's $800. That doesn't last long. That's only a couple days' worth of running around. So you'd crush the economy. The boat industry would roll over. The trucking industry would puke. And when you talk about specifically oil, is that why we tried to roll over Venezuela? And to just bring this back into perspective, how much faith could be left in the United States? 2 months ago, 3 months ago, we were telling Venezuela, it's all over. It's all over. We're sending in the military. We're going to kick your butt. We're going to back this creep that nobody even knows take over your country. We've already stolen the gold. Did we give this gold back? So, we've lost credibility. That's really the bottom line with where we're going with this. And whether it's to where the top of the pyramid leads to isn't as important as understanding that it is a pyramid. And ultimately, I would not argue with your friend. The Vatican would seem to be a good starting point. And I'll yield to Jim on this now because I know he has thoughts.
Well, I kid a lot, but I don't kid, okay, about just who's running the show. But you're very correct when you say pyramid of power, because pyramid of power means that the higher you go, the fewer run the show. It doesn't necessarily mean that one do. But I think that you'd be a wise way of looking at this, if that was what you wanted to try and figure out, is the same people that ran the show in the 1900s run it right now. Nothing's changed. Okay, you say, well, generations change and generations become weaker. But you have to know how these families work, how they train their progeny, the ones they pick as capable and able, and how they preserve themselves. So I think that throughout history, where has the problems always started? How about old Rome and the Crusades? How about Pope Urban and the First Crusade, promising everybody that joined the crusade that all their sins would be forgiven? How about the money side of the Crusades or the Knights Templar? So when you look to Jerusalem and to Rome as being centers of an operation, I think you begin to get a good feel for part of the construction of the highest levels of the pyramid. I don't think the Romans or the Zionists, the Jewish community that has moved back to Jerusalem, are actually the operators. But I think that they are certainly the army. So when you say look to Jerusalem and look to Rome, where did you ever look to but to Jerusalem and to Rome in the history of Europe? Think about it. Nowhere else, ever. The newcomers are the Middle Eastern guys.
This man was so dead serious, and so I just wanted to get Dave and Jim's opinion on that. Now,
I wouldn't argue with them at all.
Bill, you've said for several weeks, if not months, that if gold clears the 1,400 handle, it's gone. And if it's gone, I guess what I want you to let us know as listeners is, what does that really mean? Does it mean the dollar's toast? Does it mean the economy is going to slow down? Does it mean that a recession or a depression is beginning? In the grand scheme of things, when you say it's gone, what does clearing 1,400 really mean, Bill?
Well, what it does, what it brings front and center is a failure to deliver. Because think of gold just as anything else, as a momentum play. But gold is the ultimate momentum play because it is real money. It's core money. What over 1,400, what that's going to do, and I'm sure listeners have the mindset thinking, okay, now it's broken out, it's going higher, I'm going to buy some more. And what that does is, obviously, it unleashes demand. And demand unleashed onto a system that's 100, 300, 500 to 1 rehypothecated, that demand where people say, okay, here's my money, I'm buying gold, I want the gold, or even in silver. That gold and silver does not exist. The gold and silver in today's system does not exist. I mean, if you use the number 100, and it's way higher than that, but if you say that gold is rehypothecated 100 to 1 or 100 times over, that means that there's 99 people who think that they have gold, but they really don't. It's just a paper receipt is all it is. Now you add onto that new demand, and that new demand is stepping up and saying, okay, here's my money, I want my gold. But the gold doesn't exist. Whether it's COMEX, whether it's LBMA, it doesn't matter where it is. It does not matter what exchange. But when there is a failure to deliver anywhere in the world, that's it. Gold becomes literally priceless because, I mean, think about it. What's it worth if you can't go out and buy it? What's it really worth? It's worth, pick a number. Jim's using a number of 50,000, and I would say 50,000. That would be in today's dollars. That wouldn't be in inflated dollars. So the bottom line is, over 1,400 will unleash demand, and it will tip. It'll tip the failure to deliver. It'll bring that into play.
I think certainly 50,000 would fix a lot of balance sheets. I'm impressed that Jim's got that number, but if you do the math, if they have the gold, I think 50,000 is going to solve a lot of balance sheet issues.
If they have the gold, yes.
Yeah, so off to you, Jim. There are rumors.
1 second. I did
yes,
I was involved in as an expert witness in a lawsuit last year, and I actually did the math. If you take the 21 trillion and divide it by the gold the U.S. supposedly has, that number is $87,000 per ounce to cover our debt.
Yikes.
And that's just the on-books debt. That's not all the future promises, guarantees, Social Security, et cetera, et cetera. That's just the on-books 21 trillion, not to mention the 21 trillion that's missing, blah, blah, blah. So Jim's being very conservative by saying 50,000. It sounds crazy, but it's not even close to crazy.
It's as crazy as I want to appear. Okay?
Too late.
Okay, sorry about that.
That's all right. Hey, Jim, there are rumors and now even innuendos that China has created and started to use what's known as a gold trade note as a way to settle up oil purchases with the Middle East. And there's a lot of evidence that this has taken place in countries like Oman, Saudi Arabia, and Qatar. Now, on the face of things, this would seem to indicate that China is really promoting the gold standard. Now, my guess is that they are doing the same with Iran. Jim, this sure looks like another nail in the coffin for the former king dollar.
Well, what it is if that is true, and it is, and if it catches on in a significant way, and it will, that is the end of the petrodollar. And the only thing that has held the dollar together after we came off the gold standard is the oil standard. Now, you take away the oil standard, you're left with only the military. And I still think the flight plan of the fighters was a U-turn. I don't think we want war, or Trump wants war with Iran at this point in time, when he's advertising that his mission is to get out of these wars, when elections are coming up, and when socialism is growing in this country by leaps and bounds. It has captured the imagination and the heart of our youngsters who have been sent to socialist re-education camps called universities. So, I got it in my own family. And all of you have it some way or another. It's everywhere with anybody who's related to anybody who's 25 years old or 30 years old, and maybe even younger. So I'm with Bill. 1400, no question about it. My opinion, it's already happened. 1400 is irrelevant now because what Bill says will happen. It's very relevant, but it will be in the rearview mirror. And the dollar will be in the rearview mirror because it already is, according to the economic law of acceleration, which nobody teaches anywhere, but is one of the greatest keys, and it is the heart of the algorithms. Okay? Algorithms are momentum. What is that economic law of acceleration? The law of momentum. So I'd say, Bill, you're spot on the 1400. I'd add to it, it will be in the rearview mirror.
Unfortunately, our colleges are not all Hillsdale College. There is the Centers for Indoctrination, to be sure. Hey, Dave, this week I think it became obvious that a lot of countries in the world are in full-on shun of the United States of America, and probably because it's sort of built up. There's just this maximum level of festivity from reckless printing and unbridled creation of dollars for us. However, there's not another country or continent, for that matter, that can provide a marketplace for the world's products. So if the United States finally cleans up the deep state, which I hope it does, and finally gets rid of the neocons, which I hope it does, and Trump's been promising this, is it reasonable to think, Dave, that if the East, including China and Russia, that if we do all these things that Trump is saying he wants to do, drain the swamp, blah, 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 would it be reasonable to assume that China and Russia might step in to help rebuild America because they'd make a great trading partner?
I don't see where the advantage would be to them. They were invited to join the Belt and Road Initiative. They chose not to. Going back to your original question, where the source of power or the top of the pyramid comes from, it has spent an enormous amount of time trying to destroy Russia. And so what Russia was forced to do was they formed an alliance with China. They both formed an alliance because they knew if they were divided, they would lose the world chess game. United, they win the chess game. I believe the United States is the prize. And when I say the prize, when our central bank was set up, the thought pattern was to rob the country, for lack of a better word, and make us subservient. It's happening. The game is it worked. It's already in play. It's time to pass the baton to the next leader of Tour de France and call it the Belt and Road Initiative. Americans are going to be brought to heel, in my opinion, most likely through currency devaluation. Last week when Trump tweeted about Draghi and the euro being unfair to America yet again, I said to Jim, this is the key that you're now going to see all these currencies devalue against gold. Because it was just like a year or two ago that Steve, our Secretary of Treasury, was out at the world stage, I believe it was at Davos, where he talked about, well, we'd be okay with a lower dollar. And all of a sudden, everybody was freaking out. Do you remember that, Bill?
Yeah, and keep in mind, we've got this G20 meeting this week, and it
Well,
would not surprise me that the world collectively forces a devaluation on the dollar.
okay, so
They make a deal, in other words.
Right, yes. So back to your question, Denny. No, I don't see them coming to our rescue. Again, the United States has bullied the world for a really, really long time. And as much as we're integral to the trading partnerships, we're not going to go away, but we're going to be devalued. You know, our standard of living is probably going to take a major hit for the average person in this country. And with all the debt that's out there, just student loan debt, credit card debt, car debt, this could be ugly. And so, no, I don't really see anybody coming to our rescue. I see us kicking and screaming all the way to the bottom, Americans waving their flag, we're going to make America great again. But the plan is we're going to get spanked. That's just my opinion based on how I read the tea leaves. That's why I feel so adamantly, and have for 20 years, either you have gold or you've got nothing, baby. You got nothing, because if what I think is going to happen happens, gold and silver are your only life vests.
I don't have any inside contacts. I just listen carefully, and what I have heard is that we are very close to a settlement or a deal with China, and it has to do with China's insistence that the price of gold be allowed to go up to at least $4,200 an ounce, and the dollar is insisting on being allowed to devalue by 25%. And those two things would help to fix an imbalance that the United States sees and the demand for China that they want to go on a gold standard. And I just put that out there that I have heard that, and what you just said, Dave, seems to make some sense for that.
That's a double-edged sword.
Yes, sir.
Because, you know, you're talking about a 25%, and I personally think 25% devaluation of the dollar is nowhere near enough. But a 25% devaluation of the dollar, you might as well call it at least a 25% reduction in our standard of living. And if you think people are pissed off now, you know, wait until the standard of living drops.
But Bill, the fact of the matter is they're still the Chinese are still sending all their ships over here loaded up, but they ain't taking anything back, man. I mean, we got nothing to sell at a price, and so I think that's what they've recognized, is that this one-way shipping
will not even put a dent in that.
Well, then it might be a start. Hey, since you're talking, this week you republished an article, not once but twice. That was probably one of the best articles you've written about. If people want to invest in gold and they really want leverage, you came up with a great article, 6 months ago, and you republished it this week, and then you republished it again with a little header on it. I read it twice this week. So tell us what you're talking about, and it's investing in mining companies. Why is it a good approach to take positions in gold in the miners?
Well, simply because of the operating leverage that a mining company has versus an individual ounce of gold. A mining company is going to have a fixed cost of production. Yeah, it may go higher if oil goes higher, but the general idea is generally mining companies have operating leverage, meaning their profits increase or decrease based on whether gold goes up or down in price 3 times as fast as the price of gold itself does. And I wrote that article, actually it wasn't 6 months ago, I think it was early May. I put that article out and I had a few questions, but nobody really picked up on it. So what I did was I posted it for the public, and then for subscribers, I posted it, and what did I put? I put down the name TRX. What you're looking for in a gold bull market is what Jim's been talking about all along, is standing on a mountain of gold. You want as much proven reserves as you can possibly have. And that's exactly why the drill program is going on now, because they are going to prove more reserves. More reserves coupled with a higher gold price equals boom.
Jim, I don't want you to make any comments on that, but I do want you to talk to us about silver as gold on steroids. The fundamentals on silver are still so incredibly bullish that it just drives me crazy. The gold-silver ratio is now north of 90 to 1, meaning 1 ounce of gold is going to buy 90 ounces of silver. So the day of reckoning has got to be close because of the decline in mining, the reductions in the scrap availabilities. But, Jim, what's it going to take to bust silver wide open here?
Hit your mute button.
Jim, hit your mute button.
Sorry about that. I got halfway through the
answer.
Well, you get to start again. That's all.
The criteria for the end of silver's bear market is even more so than gold, a failure to deliver, and exposing the fact that the demand for silver, which is growing at a growing rate, law of acceleration, that in fact there is very little supply in regard to not only the present areas of demand, but those expanding and future areas of demand. So what will it take? One exchange of significance failing to meet a demand delivery of any size will unleash or draw back the curtain that paper gold and paper silver are absolute and totally fraudulent. That the ratios on both are in the sense of how much is outstanding in paper contracts versus how many is really in the inventory of the exchange warehouses. I mean, this is criminal. But criminalities today seems not to matter at all if you are the right people. You're bulletproof, and still bulletproof. So the answer to your question is that when there is a failure to deliver on the silver side, expect to see silver explode even against the price of gold. However, in my opinion, gold has the long-term criteria that I want when I'm not around to take care of my family. So my preference is and has always been gold. If it was silver, I'd be mining silver. And the reason for being in the mining side of things now is you're trying to have the largest possible position without a margin man. Okay? Back when I was a kid, I never had a margin call because I called myself. The margin man was your greatest friend, which you considered your worst enemy, because it gets you out of something before you lost your house, hopefully before you lost your house, your wife, and your cars. My plan has been to take the wrapper off my mountain when gold, and the same period of time that the gold market takes the wrapper off the outrageous bull it is. And I think so far so good.
Yeah, no kidding.
Both were timed at exactly the same time.
Guys, we're a little bit over an hour, but I got one more question for each of you. Can we keep going for just a little bit?
Fire away.
All right. So this one's for Dave. And Dave, it has to do with international sales of aircraft. It looks like Boeing has absolutely been trounced in the competitive environment to sell aircraft. Airbus has simply won every recent sales situation from countries buying airplanes. And Dave, you're in business, and you got to have sales if you're in business. In your reading, has there been any chatter about the future of Boeing? Have you heard anything, Dave?
Yes, I have, but nothing that I could say with any credibility. when I say credibility, if I can't point to facts, I won't make a claim, and I can't point to any facts. But I'm well aware of the fact that you're stating, and I mentioned it to Bill the other day when we talked, on just how poor the showing went for Boeing as compared to Airbus.
It was 14 billion to 0.
Airbus has similar problems that have not yet surfaced. When your multiple computer redundancy system starts, and I'm a pilot in most every, I always out there, high altitude, the whole 9 yards, fixed wing, you name it. When your redundant systems start to argue with each other, they cancel the pilot in today's aircraft.
And that's the perfect reason why a man should only marry one woman.
What do you want, a lot of trouble?
Oh, great, Danny. Now I'm going to get
one is not enough?
emails. Good one, Danny.
Just saying, redundancy works.
Well, when redundancy argues with each other, it cancels the pilot. No pilot input can overcome three computers in an argument, especially when you can't take a revolver and just shoot the computer from the cockpit.
Well, Denny, the important thing here, I think, is that Boeing knew they had a problem.
Absolutely, yes.
That's the problem.
Absolutely, yes. And they didn't do the training. But what training can you do?
Yeah, well, they've
Put
lost
your nose
faith.
down. Not when an angle of attack computer, the thing that controls the attitude of up and down, is having an argument with another computer that's having an argument with a third computer.
Yeah.
That's not artificial intelligence. That's artificial ignorance.
Well, I think what I'm afraid is going to happen, and I can see it coming, is they've lost the confidence of the world because they didn't come clean engineering-wise with what risks were. And with their self-certification process, now all of a sudden they're out there with their fannies in the wind. And if that happens...
America.
I know.
You just described all of America.
Yes, sir. Well, Boeing...
in denial. Totally
well,
in denial.
You watch
they honestly
Boeing.
Believe.
Yeah. You watch Boeing, and that's what's going to happen to America. That's just where it is. Hey, Bill, since you're talking, what happens to the U.S. dollar if it is scrapped as the exchange unit for oil and interest rates are lowered to zero and U.S. Treasury bonds become the junk bonds of our lifetime? Who or what can be used to back up our credit system to keep our economy off of life support? Bill, I really don't have this one figured out.
Nothing can back up you're asking what can back up the credit system. There is nothing. It's over. The credit system is mathematically, we say this week after week, mathematically untenable. The debt cannot be paid back. Simple as that.
Yeah, Bill,
and
from
foreigners will not want to use dollars.
I'm sorry, Jim, what did you say?
I said what Bill is saying to me is from Route 66 to the Silk Road.
Right, exactly. And foreigners are going to want to do business with people that they can trust. This goes back to the Boeing thing. This goes back to basically the way America has done business for the last 40, 50 years. The book, Confessions of an Economic Hitman. What did we do down in South America? We'd lend money that we knew they couldn't pay back and then foreclose on the asset. Now, China is starting to do that all over the world, but they don't have the reputation yet for doing that.
I believe that China will start foreclosing on farmland. There's a lot of Chinese money in land, and whether it's in Canada or in the United States, we might see the Chinese taking big positions in farmland in America.
Surprise, surprise, surprise.
Yeah.
All right, Jim, last question of the day. We have heard your discussions with the other boys about Bitcoin and cryptos. I think that was about a year ago. Now, Facebook has just launched a cryptocurrency, and were it anybody but Facebook, I'd probably laugh it off. But Facebook's got a couple of billion subscribers. So, Jim, as a community service, what warning would you give to listeners as we hear more and more and more about cryptos, especially from Facebook?
Well, I wouldn't write them off by any matter of means. I think the dumbest thing in the world, which is to invest in nothing whatsoever of value, except an accepted demand, The demand will be extraordinarily high because it's the beloved of the nerds, and that is what is running the show today. I believe all of this is a flag being run up, the flagpole, to see how many salute for use in central banks when the dollar no longer has anything to fall back on. And it will be a cryptocurrency that is non-tradable by anybody else but the central banks. It will be decorated in gold by the central banks, but not convertible. And all you've got to do is, by edict, and by regulation, take out of play all other cryptocurrencies, no matter issued by whom. So the new currency that will be around will be very much involved in a non-tradable crypto decorated by gold, which only central banks can trade in. Don't poo-poo the idea, but it is laughable and it's awful that somebody who's worked all his life and built up what he thinks he's going to retire on is now going to transfer that into a piece of electronic script that is absolutely, totally, and completely worthless.
How about this, Denny?
Yes,
a
sir.
nerd/fool is soon parted from his capital money.
You know, I grew up as a nerd. I was 5'2" till I was a sophomore in high school. So I had to study hard, and I am a verifiable nerd, pocket protector and everything, boys.
Oh, come on!
But
I am.
Yeah, I'm telling you, that's how I survived life.
We had a 50s party. I asked my wife what I should wear to the 50s party. Oh, sorry.
All right, so that's it for me. Boys, thanks for hanging in there. We're right at 75 minutes, 80 minutes, but I really appreciate
you.
It's
so important this week, okay, Benny? So important. It doesn't make any bit of difference what time it takes. I think for all of us, we see this as a pivotal turning point that will prove us to have been absolutely correct in our argument for many years.
I'm not sure who it was.
The time is right.
Yeah, was it Dickens that says, may you live in interesting times? My goodness, we're in interesting times for sure. Yeah. All right, that's all I got. I'm sorry?
That is a Chinese proverb, and it was meant as a curse.
Well, thanks. I blamed it on an Englishman.
Times. That is a Chinese curse.
Yeah. I always like it the way you...
Let's all learn to speak Mandarin and Russian so we can talk to our bosses.
I always like it the way Bill corrects me. He does it so professionally.
Oh, then, listen, I know this very well. You just shut up because he tends to be right, you know.
You know, one last thing I will tell you, that in 1968 I took a world history course, and my professor at the time was Professor Stone, and she said, historically speaking, the United States of America, and this was in the midst of the Cold War, she said, in the midst of all of this, just remember that the Russians and the United States, the Americans, are ultimately going to be the best of friends, trading partners, and allies. Boy, it couldn't be further from the truth right now, but I still have hope that Professor Stone is right, and I hope we get right with the rest of the world.
If the Clintons had left Trump alone, that might be in play.
Yeah. All right, boys. Next week, same time?
Same time, sir. If we're
I'll be on the road.
I might say if we are all here.
Yeah, next week I'll be on a cell phone, so I apologize ahead of time, but I'll probably have some snap, crackle, pop in the background.
Okay.
We're gonna get you a sat phone, Bill.
There you go.
Hey, one more thing. If the markets do blow up, we will come back to you again. Just know that we'll be on standby. But if things really get dicey, we'll probably be dialing in midweek too. But let's hope we don't have to do that.
Hope so.
Yeah, later, guys.
Thanks, David.
Hey, guys, have a great rest of the weekend.
Take care, guys.
Bye-bye now.